we have seen a recovery in Reliance, and as a result of which we saw the recovery in Nifty itself. But let's talk about Havells, because the company has reported a strong revenue growth in the fourth quarter. Although margins missed estimates on the back of higher input costs, the key to know is how their Lloyd's business will perform as well. Lloyd's, remember, the margins are just about 5% as against the overall company margins of, we're seeing somewhere around 20% odd in terms of their EBITDA margins itself. Let's see where that goes right now. We will be joined by the management in just a bit. Anil Rai Gupta, the chairman and the director of the company, now joins us. 20% is the gross margins that I was speaking about. That has contracted from around 22 odd percent. Mr. Gupta, thank you so much for joining in. And let's talk about a couple of factors. One, summer's been extremely strong so far, in terms of the heat that there is. We've heard from the managements of Symphony, etc. They expect this year to be one of the best years for the company, especially because it comes on the back of two really bad years as well. Even in that, your fourth quarter revenues were the highest that you've ever posted in a quarter. Can you better this from here? What's the outlook for the first quarter and FY23?
Well, I think the outlook that we see for the first quarter and the 23 is strong, and it's not just based on the fact that it's a strong summer. Though, as you rightly said, we have had two very strong, or I would say very weak summers in the last 2 years. But the fact is that if you look at the overall situation in the country, we have a strong impetus on infrastructure. Capex cycle is recovering. Real estate is doing well. Consumer demand continues to do well, despite the raw material cost increases. So it's a strong indication that the coming year should also be a strong year for a company. And I think the demand should continue to remain strong in all the sectors, not just in the consumer sector.
All right, Mr. Gupta, a lot of analysts as well as your shareholders will be listening in, so they'll want a bit of a guidance. You're sounding very, very optimistic about the coming year, but could you put a number to that? What should be a broad range in terms of a top-line growth? And also, if you could give us a margin band. It's come down to roughly around that 12% odd mark. What should the band be that you can work with? Go ahead.
I will go ahead, but we don't give guidance on numbers, and hence I will not be giving on this call as well. Let's look at the fact that you talked about margins or revenue growth coming from here. Margins, Havells continues to remain strong. Our EBIT margins continue to remain north of 50%, which has been the trend in the past. Lloyd, we've had serious price cost increases both in Havells and Lloyd, and the companies or the industry has taken not to completely pass on the price hike, and hence not taking effect of the fact that there could be demand so effect on demand, because we are seeing a good summer after 2 years. So, Lloyd there is a little bit of stress on margins, but I think the kind of volume growth that Lloyd is witnessing, we should see margins coming back to normalized levels once the raw material prices come to normal levels, which will take some time, but I think we are not extremely concerned about the margins on an overall basis. Lloyd will come back. Havells is strong, so we should be quite okay there. But as I said, all these sectors, whether it's the infrastructure, the industrial, the consumer, the real estate, demand is strong, and hence the coming year should witness good growth.
Mr. Gupta, can you give us a sense of how April panned out? Because like I said, Symphony did say that April for them, they saw 40% growth over April 2019. That's point number one as far as demand is concerned, because you're very sanguine on demand so far. And secondly, since demand is so good, why don't you pass on the input prices to them as well and protect your margins?
Well, I think, there is a certain amount of elasticity in every product segment. And hence, as I said, the industry is also witnessing a good growth after 2 years. And hence, they don't want to be stuck with inventory if there is, a reduction in demand. So the demand is strong, probably because not the entire price hikes have been given to the market. We will definitely see this summer a good summer, so that the volumes remain strong, and of course the margins will come back over a period of time. So I don't think this is this is the time to actually protect margins and not look at growth. So,
Right.
so the entire industry
No,
Havells is
but
looking for
how
that.
much higher was April 2022 as compared to April 21, April 20, and April 19? If you could give us a sense.
Well, I think, April 20 and April 20 and 21 is not to be looked at because,
Right.
complete lockdown, the Delta wave in April 21. It is higher than 19. And I don't specifically say it's only because of, the industry, but also because of the fact that there was pent-up demand. But also, Lloyd has completely gone through a transformation. In April 19, we were completely dependent upon outsourced production. Today, we have complete in-house production. So there's been a lot of changes in Lloyd for the summer products, and hence I'm not really looking at growth over the last 2 or 3 years.
All right. Mr. Gupta, you mentioned that input costs have gone up, and you'll have clearly said that, you'll haven't passed on the entire input cost spike. If you could give us a range, input costs have gone up. What percentage of that have you all been managed to pass it on? And also, what about the non-seasonal products? How's demand out there? Whether it's cables, switch gears, the other products as well. Has demand got impacted at all, or is it as strong as possible? Go ahead.
So I think if you look at different product segments, in cables and wires, we are almost forced, because the gross margins are low, almost forced on the entire cost increase, and that's where copper, aluminum, steel is the largest consumption, and hence we've been able to pass on. We've taken certain decisions of not passing on the entire cost in electric consumer durables and the Lloyd segment, and that has impacted the margins to some extent in lighting as well. So, the demand that you talk about, the demand continues to be strong in the consumer segment as well as in the industrial infra segment for Havells. So all segments, whether it is lighting and ECD, we did see some blip in switchgear growth in the fourth quarter because January, February, we witnessed the Omicron scare. But I think things are coming back to normal levels. So all market segments are doing well.
Okay, demand's good. You're not giving us too many numbers, but supply chain management, there have been certain disruptions for various industries. For y'all, are you all facing that as well? Or is it pretty much normalized now? Go ahead.
Well, I think there are certain supply chain issues. For Havells, it is less because we are a completely integrated manufacturer. We are manufacturing 95% of what we sell. There are certain issues with some components, but I think that is still in manageable levels. So we don't see supply disruption as a big issue at this point of time.
And by when do Lloyd's margins come back? You said Lloyd's margins will come back. On Lloyd's itself, last year you did what? Close to around 2260 crores in terms of top line. Can you do 2,800 to around 2,900, 25 to 30% sort of growth in this year? And when do the margins come back? You said it was on account of input cost inflation. We haven't seen the worst of it yet, or have we?
So two things. One, as I said, we don't give number guidance, and hence I'll not comment on the 2,900 number. We are witnessing good growth, and hopefully this should continue. We definitely feel that the raw material prices are at a very high level. They've stabilized over the last couple of months. Hopefully they should start coming down, or at least remain stabilized. Hopefully we should not see them going north from here.
Okay, final question then, Mr. Gupta. I'm looking for a number out here. I'm hopeful at least. Advertising as well as sales promotion as a percentage of sales. What is it likely to be in FY23? Now, if demand is good, the spends have to get up as well. So what would be that number? And you're sitting on a good cash balance. What do you plan to do with it? Some inorganic growth, or do you want to return some money to the shareholders? Very quickly.
Well, a lot of questions, not just one question. So I'll answer all of them.
Last two, advertising and cash. What do you want to do with it? Yeah.
Advertising and promotion is coming back, and we actually didn't reduce to a great extent even during COVID times, because we believe advertising is more of an investment. So this was coming back to normalized levels. We should be looking at least around 2.5% of A&P spends in this coming year.
Right.
And as far as cash is concerned, there is definitely, because of the strong demand, we are seeing a good capex, cycle this year. We should be spending close to about 700 to 800 crores in capex the current year, as well as the dividend policy continues to remain as it was. We're paying 40% back to the shareholders for net profit.
So that still leaves you with about 1,000 crores in terms of cash, 1,200 crores. Can we hear you go ahead and buy some companies which are available? You have been talking about companies which are either taking you to a new geography or bringing you into a new category. Have you found something?
I would not say as of now, and we are, while from the outside we may look like an acquisitive company, we are quite conservative in terms of, really evaluating what makes sense for us to do organic growth versus inorganic growth. And there have been successes of many inorganic new entries for us in the last 10, 15 years, whether it's fan or water heaters or appliances. And, these are almost like seeding new businesses within Havells. So we'll continue to look at opportunities, but there are many, organic opportunities of growth within Havells and Lloyd.
Okay, all right. Mr. Gupta, it's been good chatting with you. Demand strong, no big supply, problems out here. We missed out on a few numbers, but you're sounding extremely optimistic. We wish you all the best for FY23, and thanks so much for joining us here on CNBC TV18. Well, on that note, though, we'll have to slip into a short break. Markets are holding strong. You come back, we'll focus on stocks as well as track the markets.